It's UPBOptionMillionaires.com, Thursday, February 25th, 2016. Before the market opens, you're going to go over some charts. Heading into today's trading session, I bring up the VIX to start the trading day because I talked about some of my recent market videos. The 30 level is acted as resistance, and when the VIX has hit that level, the stock market has rallied, a relief rally, and that's what we got a couple weeks ago when we hit our lows. S&P 500 ETF, the spiders, was at 181. And if you look over the last couple of years, that 30 level indeed that we hit just recently has sparked a rally, a relief rally. And if you look at S&P 500 futures, that's exactly what we're getting for now. If you look, trendline support still has not been broken, although we're nearing it. We've put in a lower low, which is bearish for the market, but we'll see what this rally has in store for us. Did not look like it was going to be much of a rally yesterday. We hit our lows. I talked about this 1900 level on S&P 500 futures as being a point of support. And if you look, you go back to last week, 1900, big sharp move to the upside. We broke through it. We broke through it this time around. We kind of messed around with a little bit here at 1900, broke through it, and then embarked upon this massive face rip rally. It was really a tale of two stories. Yesterday's trading session, significant sell-off, and then a sharp, mind-boggling reversal. Seemingly nobody wanted to buy the stock market here. And then everybody did here. I mean, it was fast and furious. The S&P 500 ETF, the spiders, was going up in 5-cent increments. It was like a penny stock yesterday. And you can see the action we have here. After the closing bell continued to the upside, and now here before the opening bell this morning, we're starting to get back up to those levels. S&P 500 ETF, the spiders, at 194. So it's just a huge move to the upside yesterday, a big reversal. And if you look at the VIX, exact opposite, was beaten down. We gapped up because the fear was strong yesterday. Got up to the same level that we saw on Friday of last week, and then we pulled back. And that was an indication. You can see the VIX melting lower throughout the session. So if you look from a short to medium term perspective, the VIX and the VXX both have been working as good indicators where the market's going to head in the short to medium term. Something else that helped to really spark a rally in the stock market was crude oil. Crude oil hit its lows and then had a really strong rally, up about 8% off its lows. You can see it's consolidating here. Maybe some sort of a megaphone topping pattern. We'll keep an eye on that. That's something else you can watch for to lead the market, crude oil, which also brought energy back in the positive territory. Let's look at some of the bigger charts here, the bigger picture here for the 5-year weekly chart for the S&P 500 ETF, the SPY. And you notice each of the times we've come to the support line, it's been rejected. These big wicks to the upside of signifies a reversal, a sharp reversal, a rejection of this support line. But notice also as we go down here over the last year and a half that each time we've hit it and that price has been rejected, we actually came back to hit it a little bit sooner and a little bit sooner. So we're nearing that point where we're going to come down to test it. And I think when that line gets tested, support line here gets tested again, it's going to break, setting us up for a move for more downside in the weeks and months to come in 2016. QQQ tech shares here bouncing. Again, I was looking for a move down here, supported about 94. We got pretty close. We bounced. Again, if you look back to the lows that we saw in the summer, certainly not up where we were off the rally, off that crash. So to me, this is some part of a lower high here, and we're going to start to roll over soon. IWM was able to reclaim that key 100 level. If you look back, we had 120, 110, 100 has been key here, and see how we're just meandering around here. If you look, this looks like a nice bear flag to me. We're going to continue to head to the downside for IWM. And I think we're going to head down to the low to mid 80s. Sounds like a forecast for Florida, but no, it's IWM heading forward here. So we'll keep an eye on this candle here to get to the 103 level, break this flag to the upside. We'll reverse the bearish bias here in the short to medium term for IWM. Let's look at LinkedIn, because I brought up LinkedIn at the height of the sell-off recently. It actually plunged significantly over 50% from its highs. And you can see the bounce we had. The key level was 100, and see this reversal we're having to the upside. CRM reported earnings yesterday after the bell this morning, being upgraded. So we're going to see more upside here for LinkedIn. I think the gas is going to run out here at former support back in 2014 at about 140, a 40% move to the upside. My goodness, to think we're almost halfway there. Yeah. So keep an eye on LinkedIn. Also, if you're going to be bullish on something, Facebook continues to respect support. Continues to respect the support. So Facebook, look at the supports near 100 here. We've had a nice 3-week rally here for Facebook, likely to continue. Now let's look at the bond market. This is the 20-year Treasury ETF, TLT. You can see the breakout. Prices were compressing here. I talked about this heading into 2016. Look at the breakout we've had. So a possible double top here for TLT, the 20-year bond Treasury ETF. Possible move back down to support. The only thing that's really keeping me bullish on bonds is the fact that overseas, the central banks are forcing everyone into risky assets, and the bond market certainly is not a risky asset. So something to keep an eye on here, TLT, as it continues to rally. And I think downside coming for XLE is going to continue in 2016. The only caveat I have here is this long-term channel, this trend. We are getting a bounce here. Could this bounce possibly bring us up to former resistance here that we saw back in the spring of 2015? We're going to get back up to 65, 67.50 here. There's one thing to watch for XLE. I do think it's going to break down. That 50 level, I talked about this many, many moons ago. Look at this. We came down. We hit 49.82 or something like that briefly on one trading session before we bounced. That is going to be broken. If you look, again, from a long-term chart perspective, the trend is broken. We're going to break down through 50 and possibly head back to the lows that we saw in 2009. The miners, I talked about gold. Actually, let me just bring up gold real quick, because if you look at gold, look at that. It's just broken through long-term trend line resistance. This is very bullish for gold. I hate to say it. I'm not one of those gold bugs, but if you look at the chart is telling you more upside awaits, which means the gold miners are going to continue to see a relief rally. Look at this beautiful spike to the upside. We can get up to the 25 level on GDX. So you might want to, if you got a short on GDX, get out of it. I'm not sure I'm going to participate in this rally, but if I was going to buy options in GDX, I'd be buying call options. And you can hold true the same kind of statement with FCX. Look at this head and shoulders pattern. I talked about this with 52. 40, 37. Nobody believed me about the pullback that was going to come. And my goodness, did it ever come down to penny stock status. Before bouncing here, we can have a little bit more of a move up to 10, maybe 12.50 for FCX. So if you're into that penny stock stuff, FCX might be the one for you. Also, some of the other gold mining stocks, Newmont Mining Corp, also making a move. And if you draw a trend line across, the supports worked well. Breakout possibly up to 30, maybe 32.50 for Newmont Mining. A couple other stocks to look at. Apple, and I talked about this recently. You can see support here coming at about the 92.50 level. We bounced off it yesterday. I know there's a lot of lines here. We'll zoom in a little bit. You can see we've had a lot of legs to the upside, and each of the pullbacks has been a really great buy point for Apple. The question is this another pullback to be bought? We have this head and shoulders pattern. I think it's going to head back down to the low 80s here, possibly down to this long-term trendline support that brings us back to the May 2013 lows. Something to keep an eye on for Apple, because that's not going to bode well for the stock market. Let's look at Amazon, because you can see the move. The last 3 weeks, Amazon's had a really significant move on a monthly time frame. It's got a nice hammer candle. We pull it up on a weekly, and we come in a little bit on a 5-year chart. And you can see really strong rally over the last 3 weeks. And I can actually see this rally starting to gain some more momentum if it breaks over the 560 level, which was something it could not break previously. Got up to about the 560 level, pulled back, and then had a nice gap down yesterday before recovering some of those losses. So look for the next couple trading sessions. We break over 560. That's going to launch Amazon up over 575. All right, UPBOptionMillionaires.com. Let's look at S&P 500 futures real quick. Shaping up to be another bullish day for the market, but if we cannot break over, if you draw a trend line across, break over this level, get back. 1940 has been a really key level over the last year and a half for S&P 500 futures. Again, supports at 1900. We broke through it briefly. That break is not really bullish for the market. Okay, we held 1900 last week. This week we broke below it. Who's to say we don't go below it next week? So keep an eye on that. Short term, the market has moved off its lows, somewhat of a bullish bias. But longer term, we have to break over this trend line here, this potential W bottom here for S&P 500 futures, similar type bottom that we saw back in the summer crash of 2015. UPBOptionMillionaires.com. I'll see you in the chat room. Everyone have a great trading day.